Hello everyone, welcome to Officers at the 247 class. So heartily welcome to all the bankers in this early morning class, and we are going to discuss the important MCQs that is related to your module C. So let's start today's session, and before to start I would like to say whatever the concept we are just going to explain you through the questions, just try to understand it, just try to note down that. Okay, so there is a one important thing I just wanted to tell you, that if you're new on the Officers at the 247, just hit the subscribe button so that you can get regular update from our side and download the Adda 247 application so that you can get everything at a one place. Okay, so before to start the session, this is a last chance when you should just enroll like in the selection batch. That is, new batch is going to start from the 20th of May, and in this batch you are going to get everything. Like you are going to get like whenever we're talking about this is a selection batch, that means now this is the last time, or now that this is the last opportunity, then you can just enroll in our batches, or you can also just say that it is a fresh batch where we are going to just teach you. So in this batch, you are going to get the 80 plus ebooks, 80 plus topic wise mock test, full all the recorded classes, all the live classes, all things you are going to get. Okay, so the only thing that you have to use the code, that is Y422, and with this code you are going to get the big discount. So remember the code Y422, and with this code you are going to get the big discount. That means you are going to get this like this batch is at very minimal price. So this is the last time then you should just enroll in this batch. Okay, so let's start today's session with the very first question. Just try to understand that what the question is and how to solve this kind of the questions in the examination also, right? So now just try to understand what the question is. So in the question, when cash is given, stock is given, and B oblique R, what it means, that it means the bills receivable. Okay, so whenever we talking about the B oblique R, I think it is understandable for everyone. This is known as the bills receivables, and whenever we're talking about the bills receivable, that you are going to understand in the chapter of the bill of exchange. Okay, where we are talking about the drawee, seller, buyer, right? And the bill of exchange, where you are going to understand the bills receivable that actually belongs to the seller, or you can also understand that actually belongs to the debtor, that actually belongs to the creditor, or you can also understand that actually belongs to the maker of the bill of exchange. Okay, so bills receivable, you can understand it is a 30,000 rupees, so it always work as an you can say it is always work as an asset for the company, right? So whenever we're talking about the bills receivable, companies having, you have to understand it is the asset for the company. Okay, and creditors, that is 30,000. What do mean by the creditors? Whenever we talking about the creditors, that means we are the debtor, or we can also just understand in the terms of the company that the creditors value is the 30,000. That means company have to make payment of the 30,000 to its creditor. That means company actually borrowed the goods, or borrowed the amount of money from the like the this kind of the creditors. Okay, so that you have to understand, that you can understand as a borrowed money, or borrowed goods of this amount. Okay, now, and the bank OD is given the 20,000 rupees, and we have to just calculate the current ratio in this question. Okay, so whenever we talking about the current ratio is what, so we know the current ratio is all about the current asset, and it is divided by the current liabilities. But now the question is, because we know the cash is our current asset, we know the stock or inventory is our current asset. Bills receivable, whenever we're talking about the bills receivable, you have to understand it is also an asset for the company. Okay, now because we are talking about these all are the assets are given, or you can also understand these all are the current assets are given. Now the question is, if we have to find out the current liabilities, so how we can just find out the current liabilities? Now creditors, whenever we talking about the term that is the creditors, that means this actually belongs to the current liabilities. That means the liability that we have to pay within a, or say within an accounting period. Okay, and whenever we're talking about the bank OD, so bank OD is a current liability or not? That is a very interesting question, and from that you can get the question in the examination as well. Okay, so whenever we're talking about our bank OD is a current liability or not, or bank ODs belongs to the current liability or the non-current liability, so you have to understand bank OD is considered as a current liability. Okay, this is a very important, just write down that bank OD is bank overdraft is considered as a current liability, because this kind of the liability we have to pay within a accounting period. Okay, so that is considered as a current liability. Now Now if I have to find out the current ratio, so how I can find that? We know the current asset and it is divided by the current liability, so we know the cash is given the 50,000, stock is given the 20,000, bills receivables is given the 30,000. When we just sum up this, so we you will get here 50 plus 20 plus 30, that would be equal to the 1 lakh. Okay, and it would be divided by the current liability, so creditors and the bank OD both related to your current liability, so that would be equal to 30 plus 20, and that would be equal to the 50,000. Now if I ask you what would be the ratio, then you will say the ratio would be 2 is to 1. The correct answer, that would be the 2 is to 1. So that's how we actually solve the questions in the examination. Okay, and look, the question is not important. I once again I'm just saying that the question is not important. The important thing that to learn the concept and to memorize the concept. If you just memorize the concept, so only the question changes, concept never changes. And if you learn the concept, like you just learn that creditors are current liability, bank OD as current liability, now any question just come into your examination and where the bank OD is given, so you will understand bank OD is your current liabilities, right? So that means that you have to just write down whenever you finding anything is important, because this is the thing that you have to understand in a proper way. Okay, now the next question. Next question is the term current liabilities does not include, you have to just tell the answer for this. The term current liabilities does not include. So what would be the answer of this question? Whenever we're talking about the term like the current liabilities does not include, you have to understand like the multiple options are given, like the sundry creditors given, debentures given, bills payables given, outstanding expenses are given. So what we understand by the debentures, debentures are just understandable as a bond. Okay, and whenever we're talking about the bond, you have to understand bond is usually just going to be issued by the issuer, or you can understand as like the government and the corporation actually issued the bond. So you can understand it is always issued for considering the medium to long term range. Okay, so that means whenever we're talking about the current liabilities, we actually talking about the liabilities that we have to pay within a 1 year. Okay, so whenever we are talking about the current liabilities, you have to understand the all the liabilities that we have to pay within a 1 year, that we have to consider as a current liability. And when we talk about the debentures is a bond, and if any company issued the bond. Okay, so you have to understand, if any company issued the bond, that means if the company issued the bond, this is actually purchased by the general public. Now the company's responsibility is to pay the interest as well as a capital for the capital to the investor. Okay, so whatever the public we are talking about, this public is actually just known as the investor for the company. Okay, so you can just know that now the company's liability is to pay the all the capital and the interest, whatever the written on this bond, whatever the terms and condition that is written on that bond. Now the company's responsibility is to pay that. Okay, so whenever we're talking about the term current liability, so or bonds always issued for the medium to long term. Okay, so medium to long term, and the most of the time you can say that the bond is actually issued for the long term. Okay, because company using for the raising funds, raising money. Okay, so you can understand this is actually just understandable as a non-current liability, but not the current liability. So the correct answer for this question, that would be the debentures. Okay, I'm hoping that everyone just understanding this, right? So hit the like button also, okay, because it appreciate our content, it appreciate our effort, right? So just hit the like button also. So whenever we're talking about the term current liability does not include, you have to understand the sundry creditors are given, that is our current liability, bills payable, that is our current liability, outstanding expenses, that is our current liability. Now when we talk about the debentures, this is also just understandable as for the, it is a long term thing, that means the company actually issued for raising money for the long term perspective. Okay, so the correct answer, that would be the debentures. Now the next question, which one of the following is a permanent representative personal account of the shareholders? This is a very important to understand. Look, whenever we're talking about the thing, you have to understand when we talk about the share capital. Okay, so you have to understand the when very just a minute for that. Okay, so you have to understand a very important concept here whenever you're talking about the share capital. Okay, so whenever you're talking about the share capital, you have to understand like the all the installments. Suppose if you're talking about the company just receiving the money of the share, or you can understand whenever you're talking about the issuance of the share. So what exactly happened? Actually, company issues the share. Okay, company issues a share, or you can also understand company actually invites the application for the public, like company inviting the application who just going to be the shareholder of its company. Okay, so company is inviting through the application. So suppose that companies issued the shares, suppose that 10,000 company issued the shares of the 10,000 shares actually company issued, and the each share value that is a 10 rupees, right? So suppose that this 10 rupees that company want, and that means this 10 rupees actually just understandable as a one share price that is a 10 rupees. Okay, so one share price that is a 10 rupees. Now just try to understand a proper way, just a minute for that. Okay, so what I'm saying that suppose that this is a company and company is actually issuing the shares. So that means that company actually want the shareholders of its company. That means company actually wants the capital also. So what the company does, company actually issued the shares. Okay, so that means who just going to be shareholder of its company just contributed into the capital of the company, right? Now the suppose that company actually issued the 10,000 shares, and each share price that is a 10 rupees. Okay, so that means one share price you can understand if anyone just want to be the shareholder of the company, that means for each share he has to pay the 10 rupees. Now it is just depends on the company. Suppose that company just do not want to get whole money in a one time, suppose that company just inviting the application, so that is the application stage. Okay, so we're just the company actually inviting the applications from the general public. Now just company actually issued the 10,000 shares, and company actually just received the 30,000 shares application. So you can understand here that company just receiving so much money like in the application phase. So you can understand company have to just reject the extra 20,000 shares, right? 20,000 shares application company has to reject. Now you can understand whenever we're talking about the phases, like the stages, like the application, allotment, and after allotment you can understand after application stage where actually company inviting the shares application through the general public. And at the in the allotment stage company actually just accept the that this public or this kind like this person is going to be the shareholder of the company. That means at the allotment stage actually the shareholders just become of the companies, right? So application, allotment, and after allotment if any other installment that company just want, that after allotment that would be just known as a first call, second call, that's it. Okay, so you can understand in this way. And if the first call is a final call, so you can just also understand is you can also write is as a final call. Okay, so now the very important thing I would like to tell you that whenever we talking about the application, allotment, first call or second call, whenever we're talking about that, so you have to understand that all just a part of the share capital. Okay, that means application, allotment, first call, second call, that all will be the part of your share capital account. Okay, so that means you have to understand a very important thing whenever we're talking about the permanent representative personal account. Application, allotment, first call, second call or final call, you have to understand that all the part of the share capital. That means all have to go into the share capital. Application, allotment amount, first call, second call, all amount have to go to the share capital account. Okay, so now you have to understand this share capital is actually just understandable as a representative personal account, while this application, allotment, first call, second call considered as a personal account for the shareholder. Okay, so application, allotment, these all are just a personal account for the shareholder. But when we talk about the representative, and whenever we're talking about the representative personal account, you have to understand it is all about the group of the persons. Okay, and here you can understand it is a group of the capital. Okay, so this is known as a representative personal account. So the correct answer that would be the shared capital account. Okay, so this is how we actually solve the questions. I am hoping that everyone is just understanding this, right? So next question. Which of the following is a temporary representative personal account of the shareholder? So what would be the answer of this question? When we're talking about the temporary representative personal account, you have to understand temporary. You can understand whenever we're talking about the temporary word, that means the share application, share application, allotment account, that all ones that is considered as a representative, temporary representative personal account. Okay, because at a one time the application account would be considered as this, at the another time that the allotment account would be considered like the representative personal account. Okay, so these all just considered as a temporary personal account, and all of one just a part of which one, that is a share capital account. And share capital account, that's why considered as a permanent representative personal accounts, while the application allotment, that all considered as a temporary representative personal account. Okay, I'm hoping that everyone just understanding this, right? Now the next question. So capital of the Mr. A in the beginning of the year was 70,000, and during the year his business earned a profit of the 20,000 rupees. He withdrew 7,000 for his personal use, and he further invested 20,000 amount into the business. So find out his capital at the end of the year. Okay, so that you have to just calculate, and the multiple options are given here. Okay, so how we can just calculate this? Whenever, like what I explained you, I always explained you one thing, that whenever you're talking about like the capital is given, so how we can just calculate this, right? So just try to understand, whenever you're talking about the capital of the Mr. A that is giving in the beginning of the year, and that is a 70,000 rupees is given. So just try to understand, just write this. Okay, just make this line this way, and this is just your financial year beginning. Okay, so now we actually started, because the capital of the mystery that is given in the beginning of the year, that is 70,000 rupees. So we will write here that is 70,000 rupees here, right? Now after that, during the year, this is your beginning capital, and this is your ending capital. Okay, right? So now when we say capital of the mystery that is in the beginning of the year was a 70,000 rupees. So this is your 70,000 rupees, and during the year his business earned a profit of 20,000 rupees. What we understand, suppose it earned a profit, that means this 20,000 rupees would be added here. He withdrew 7,000 for his personal account, that means drawings there would be, so just subtract the 7,000 here. He further invested 20,000 amount into the business, that means he further invested, so just add up here, that is 20,000. Now you have to find out his capital at the end of the year. Now just calculate 70 plus 20, 90, 90 minus 7, that is 83, and 83 plus 20, that would become the 1,03,000. That would be your answer. The correct answer for this, that would be the C. Okay, so in every question of the capital you have to do in this way. Okay, and you are definitely going to get this question in the examination for the 2 marks, definitely. So you have to understand this, right? Now the next question. Fixed asset of the company that increased from the 3 lakh to 4 lakh. So the percentage change in the non-current asset of this. Whenever we're talking about the fixed asset, you have to understand, fixed asset is what? The all what we understand by the non-current asset. Okay, when we're talking about the non-current asset, you have to understand the asset that you usually purchase for more than one accounting period, or the asset you can understand that actually just going to be generate the revenue from your company. Okay, so you can understand the fixed asset of the company that increase from the 3 lakh to 4 lakh. So it is just 3 lakh, and fixed asset actually increases, that means your non-current asset is actually increases. So it will be increased like how much percent, that you have to tell here. Okay, so what the difference between the 3 lakh and the 4 lakh, that is 1 lakh rupees. Okay, and with respect to what, that is 3 lakh, right? So what would be the changes here? You will tell that would be the 1 by 3 or 100 by 3, and this would be known as a 33.33%. The correct answer for this, that is 33.33%. Okay, you have to understand it this way, that you have to just calculate the percentage change. That means in at what amount, at respect to what amount you are just talking about, at respect to the 3 lakh you are talking about. That means 1 lakh with respect to the 3 lakh, and that would become the 33.33% changes that actually occur in the non-current asset. Okay, so this is the answer for your this question. Okay, right. Next question. Next question, where we're talking about the proprietary ratio. Now, I think everyone just memorized if you're watching regularly sessions here. So I think everyone just understood like how to solve this kind of the question. You know, when we're talking about the proprietary ratio, what proprietary ratio just explains? It always explains that shareholders fund, or like you can understand, the contribution of the shareholders funds to the total asset of the company. That's it. Okay, so whenever you're talking about, and you know, this kind of the question you actually just get in the examination, and this is a very important question. Okay, so when you're talking about the proprietary ratio, you have to understand it is all about the shareholders funds, like the contribution of the shareholders funds to the total asset of the company. So you have to understand the shareholders funds that is given because the equity share capital and the reserve and surplus of the company, that all comes under the head of the shareholders fund. Okay, so when we talk about the shareholders fund, so you will be at the equity share capital as well as a reserve and surplus of the company, so that actually become the 22 lakh 50,000 rupees. Okay, and it is divided by the total asset that is given the 45 lakh. So now if I have to calculate, so this will become the 1:2, or you can also say that it would be the 50%. Okay, so now just tell me what it means, that whenever we're getting the term that is a proprietary ratio, that is a 50%, or in the examination it may also may be given in this way like the 1:2. You have to understand that in the company 50% of the asset actually financed by the shareholders funds. Okay, so that the mean of the proprietary ratio. Now I think everyone just understood this. Okay, now just understand another question. Cost of goods sold, that is given the 1,50,000. Closing stock is given. Excess of closing stock over opening stock is given. So what is the inventory turnover ratio? It is a very good question. Okay, so what I say concept never changes, only questions changes, right? So whenever we're talking about the inventory turnover ratio, you have to understand it is all about the cost of goods sold or cost of sales. Cost of goods sold or cost of sales, both terms we can say here. Either we say cost of goods sold, or we can also say the cost of sales, and it would be divided by your average inventory or average stock. Okay, so this would be your average inventory. Now, when we talk about the cost of goods sold, it is actually given the 1,50,000. So just write here 1,50,000. Now, because we have to find out the average inventory, and whenever we're talking about the average inventory, you have to understand it is all about the opening stock plus closing stock, and it would be divided by the two. Now, the question is closing stock is given, but the opening stock is not given. But one condition here given, that closing stock or you can also understand excess of the closing stock over opening stock. What it means, that it means the closing stock minus opening stock, and it is given the equal to the 20,000 rupees. Okay, so now the closing stock that is given the 60,000 rupees, and okay, so what will be the value of the opening stock? That would be equal to the 60,000 minus 20,000, that would be equal to the 40,000. Okay, so now if I talk about the opening stock value, because sometimes in the question they're also just ask only the opening stock. Okay, but if the question is what is the inventory turnover ratio, so now you having the opening stock, that would be the 40,000 plus closing stock that is given the 60,000 rupees, just right here. Okay, and it will be divided by the 2, so that actually become the 50,000. So your answer, that would be the 3:1 or 3 times. That would be your answer for this question. I'm hoping that everyone just understood this, right? So this is how we actually solve the questions in the examination also. Okay, right? So next question. What will be the current ratio of a company whose net working capital is zero? You know, the very first thing that you have to tell me, that what will be the formula for the net working capital. So net working capital of the company, that is actually the current asset minus current liability. And if it is zero, that means your current asset would be equal to the current liabilities. And what is the formula for the current ratio? That is current asset divided by the current liabilities. And when the current asset is equal to the current liabilities, so the your current ratio would be equal to the 1:1. The correct answer, that would be the C. This is how we have to solve the questions. Okay, next question. In profit and loss appropriation account, and the number of the options are given in this context, like the recording of the transaction related to the partnership form, recording of the transactions related to the partners only, recording of the only the interest on the loan of the partners, and none of these. Look, whenever we're talking about the account that in profit and loss appropriation account, that account is actually belonging to the partners only. You have to understand, whenever we're talking about the distribution of the, like distribution of the interest, distribution of the dividend, distribution of the interest on the capital, okay, whatever we are talking about the distribution among the partner, whatever the we are talking about the distribution, like distribution among the partners of the company, among the partners of the company, that all will be just mentioned in the in profit and loss appropriation account. So the correct answer, that would be the second, that recording of the transactions related to the partners only, that would be the correct option in this question. Okay, so you have to understand, when you're talking about this account, that was all about the distribution of the interest, distribution of the your dividend, distribution of the interest on the loan, okay, distribution of the profit and loss, all things that among the partners you are going to distribute, that all will be just recorded in this in profit and loss appropriation account. So the correct answer of this, that would be the second. Okay, so I'm hoping that you all just enjoyed this session. If you enjoyed this session, just do not forget to hit the like button on this video and share this video to your friends, so that maximum number of our bankers can just learn something. Okay, so now I'm just going to talk about, like our bilingual as well as the English medium batch, that is going to just that is you can just enroll in this batches, and our selection batch, that is going to start from the 20th of May. So this is the last time when you just having the fresh live classes you are going to get from the 20th of May, because now your exam is very much nearby. Okay, so I think you should just enroll in, and you only have to use the code Y422. With this code you are going to get the big discount on the batches. Okay, so another thing that like I told you, that selection batch is just available in the English medium as well as as well as in the bilingual medium that you are going to get. Okay, so thanks everyone for watching me this like thanks for everyone for watching this session, and like this video if you're liking our effort, are liking our content, and share this video to your friends and subscribe the channel so that you can get regular update from our side. So thank you everyone for joining with this session.